Welcome into Clear Picture Financial. Your host is Jason Noble. You can find him at Prime Capital Investment Advisors. He's a fiduciary advisor, holds his FINRA Series 66 securities registration, certified financial planner, retirement income certified professional with 18 years in the financial arena, helping his clients get ready for their retirement. I'm Morgan Patrick, consumer advocate. Each and every week here on Clear Picture Financial, it is always about retirement. We also give you an opportunity to get on the calendar at Prime Capital Investment Advisors. You can meet with Jason and his team, see where you are in your retirement planning process. And these meetings, these appointments, no cost, no obligation, and simply no pressure. So stay tuned for that. That is coming up. So here we go, guys. Let's get into this discussion. To help reduce your tax burden once you retire and you free up more money for expenses and fun, you give income planning a try, absolutely. We've got 4 ways to adjust your income and get a better grip on your tax bill, because taxes, folks, they are very, very, they're going to have an impact on your retirement. So this first one, Jason, connect taxation with outflow as well as income.
Yeah, Morgan, when you're working and you're taxed on that earned income, right? However, when you retire, you don't have that earned income anymore. Instead, you have what's our tax of combination of outflows or current cash withdrawals from your retirement plan, as well as the income from fixed sources like pensions that would be taxable, and then also your Social Security could also be subject to tax. Now, understanding this switch isn't really easy, and I take time to explain this with my clients as we get closer to the time to take Social Security, so when they start taking Social Security, it's not a surprise to them. You have to realize that the taxes paid on Social Security are calculated differently than the taxes that are earned income in working years. Instead of using your adjusted gross income, the IRS will use what's called provisional income, and they use that to determine the thresholds that will say what amount of your Social Security benefit could be subject to tax. Now, I'm not going to go into all the geekiness of the provisional income, but Morgan, it could be anywhere between 0 to 85% of your Social Security could be subject of income tax.
Wow.
I mean, look at that wide gap that could be. And here's the thing I'll share, Morgan. They haven't changed the rules since they came out with them in the 80s. So the provisional income numbers are still low and not accounting for the cost of living adjustments and inflation.
I mean, so much goes into planning. We're right now just talking about the tax part of it. And again, this is a small part. You're going to have questions about your own situation. We're going to give you that opportunity to get on the calendar with Jason Noble and his team at Prime Capital Investment Advisors. Talk about your situation. So again, things you can do, ways you can adjust your income and get a better grip on your tax bill as you're moving towards retirement. We've talked about connecting taxation with outflow as well as income. But now this next one, spin down possibly traditional IRAs, which would allow you, if you can, to delay Social Security.
Yeah, when you turn 72 years old, you're required to begin withdrawing money from your traditional 401k, 403b, IRA, or their tax-deferred accounts. Because you didn't pay taxes on those contributions when you made them during the working years, you must begin to pay taxes on them now. What you may not realize is that these withdrawals are taxed at the marginal tax rate, not at the more favorable capital gains or qualified dividend rates. So what does that really matter, Morgan? Right? It's because the marginal rates are higher than the capital gains rates. Go figure, right? They want their tax money. By strategically spending your IRA assets before you turn 72, you may be able to reduce your future required minimum distributions. And if you're able to delay filing your Social Security benefits during that time as well, you can wait to age 70, which will increase the amount of your checks from the Social Security system in the future.
Tell you folks, I mean, we get into these topics each and every week, and you're going to have questions about your own situation. Well, a great opportunity is going to present itself where you can get answers to those questions. Again, get one of the appointments we're going to open up here at Prime Capital Investment Advisors for our Charleston listeners and the surrounding area. This is an opportunity to come in and sit down and talk about it. Right now, just going over ways that you can adjust your income to get a better grip on your tax bill. So we've already talked about connecting taxation with outflow as well as the income, and then spend down traditional IRAs. And if you can, delay Social Security. That is an opportunity for you. What about converting traditional IRA assets into that word we always like to hear, Roth IRA?
Yeah, by strategically shifting the assets out of your IRA before you turn 72 through Roth IRA conversions during years in which your marginal tax rates are lower, you may reduce your required minimum distributions amount that you and the taxes that you have to pay on that. Even better, distributions from Roth IRAs aren't taxed in retirement because you pay the taxes when you contribute or when it's converted. One issue that holds retirees back from converting assets into a traditional IRA over from a Roth IRA is that the taxes are due in the year that the conversion is made. These taxes increase the money that you convert. And even if you convert only a small portion of the traditional IRA into a Roth, this may help you lower your tax bill in retirement since Roth distributions aren't taxed. There is a 5-year waiting rule, but that's something that a qualified advisor and accountant can help you with. The other thing that you also have to be concerned about is if you're on private insurance under the Affordable Care Act, that could raise your premiums. And if you convert too much when you're on Medicare, that could raise your premiums 2 years later as a 2-year look back. So there's a lot of things that have to come into play when looking at this strategy.
I'll tell you, you talk about it, and Jason, we're hearing you and just how many details are involved when it comes to retirement planning. And we're just talking about the tax part of this. So make sure you have all your I's dotted and your T's crossed. Make sure you have a plan. There are many of you out there that haven't started planning, or maybe you're thinking, you know what, I can do this myself. You know, I'll get an app on my smartphone and I'll just knock it out. I mean, having a plan, having someone, a fiduciary, sit down with you and walk you through, the possibilities for your retirement. You talk about your goals. You talk about that strategy to get you there. So many moving parts. You want to make sure you have all your puzzle pieces and they fit snugly together when you get to retirement, and not only get to retirement, but all the way through retirement. So working with a professional is vital. We're just going over just things that you can do to adjust your income so you can get a better grip on taxes. We've already talked about connecting taxation with outflow as well as income, and then spend down that traditional IRA, possibly delaying Social Security, which, the longer you delay, the better that check is going to be for you if you can do that. A lot of people have to take it when they have to take it, but take a look at it, see how it's going to fit into your plan, and then convert traditional IRA assets into a Roth IRA. And if you don't have the IRA assets, maybe just start contributing to a Roth, Jason.
Yeah, I mean, you have to have earned income to make a contribution into a Roth. But if you're still working full-time or even part-time, you could contribute to a Roth regardless of your age. If you're under the age of 50, you can make a Roth contribution for $6,500 in 2023. So we're at the end of the year. I'm already talking about 2023. Go figure. That's a planner talking.
Crazy.
There, right?
I mean, it's crazy that we're talking 2023. It's right there.
I'm looking forward to 2023, especially the way 2022 has been in this market and economy, right? I think we're ready to flip the page and go to the next year. But let's enjoy this holiday season, right, Morgan? Let's take time and be with family and friends.
Oh, absolutely. Absolutely. But, yeah, take that pause. But also, if you're out there and you're thinking about starting retirement planning, don't wait too long. I mean, this is something you don't want to procrastinate with. You want to have that ease of mind, knowing that you've started down the path in planning. Or if you're in the middle of something and you're just confused and you have questions and you're not getting feedback from your current advisor, get a second opinion. We're going to open up those spots here in just about a minute or two, so stay tuned for that. All right, so bottom line, final word when it comes to taxes, things that you can do to adjust your income to get a better grip.
Yeah, between RMDs and taxes on Social Security, taxes could be a rude wake-up call in retirement. By proactively planning before and during retirement, you can potentially minimize your taxes, have more money to pay your bills, and enjoy your retirement.
Tell you, folks, this is an opportunity right now. So Prime Capital Investment Advisors, where you can find Jason Noble, our host of Clear Picture Financial, is about to open up positions on the calendar. I know you're busy, Jason, but how many spots do we have this week for our radio listeners?
10 spots. If you're one of the next 10, Morgan. Okay, we expanded it from 5 to 10 with everything that's going on. And we want to be able to provide that clear picture analysis, financial review. That's going to indicate if you're in need of a full-blown wealth plan. We'll refresh your financial plan, especially with all these changes that we're seeing in today's market and economy. We're going to look at a risk-first approach. That's going to determine how we're going to allocate and optimize the portfolio. We also look to see how we can save you money on taxes. We just talked about that, Morgan. Let's see if we can put more money in your pocket and less than Uncle Sam's. And we're always going to evaluate the estate plan. Listeners, we really want to put a peace of mind to your retirement for the rest of your life. And we do that by providing a clear picture financial review. This is complimentary for the next 10 callers, Morgan. How can they reach out to schedule these conversations?
Absolutely. Remember, this is customized to you. This is not a drawer A, drawer B, drawer C. They're just not going to pull something out of one of these drawers and say, all right, we're going to put you in this. It's a conversation. You talk about where you currently are. You look at your assets. You look at that portfolio, and then you start to plan. And that's why planning is so unique and custom needs to be as you move towards retirement. Here's how we're going to do this. We have, again, 10 positions. They're going to be open the entire show. And this is no cost, no obligation, simply no pressure. Here's the phone number. You can call this number, 800-948-1216, or you can text NOBLE to 600-700. That's NOBLE to 600-700. I mean, Jason is offering you, retirees and pre-retirees, just common sense and straight talk. It's an opportunity for you to sit down and get this clear picture analysis, talk about your situation, get to know Jason and his team, and really kind of focus in on what you want out of retirement, and then create that plan, create that roadmap to get you where you want to be. Folks, you've got nothing to lose. You've got everything to gain. If you have not started planning, this is an opportunity. If you are in the middle of something, this is called a second opinion, and it's available right now. 800-948-1216. That's 800-948-1216, or simply text NOBLE to 600-700. That's NOBLE to 600-700. Get on in here.